Let's dive into what's happening in the real estate world. Whether you're guiding a first-time buyer toward their dream home or helping an investor spot a smart opportunity, it's essential to keep a pulse on where the market might be heading. With interest rates and home prices remaining elevated, we could see some significant value shifts in certain types of homes over the next 12 to 18 months. As the housing market shifts, buyers might find opportunities that were previously out of reach. Meanwhile, sellers must carefully evaluate their listings, adjusting expectations to meet the new market reality. Industry experts have identified 5 key property types that are primed for price changes, providing insights into where adjustments might occur and encouraging both buyers and sellers to reevaluate their strategies. For potential homeowners, this could signify a pivotal moment. For buyers, this could mean exploring options they once deemed unattainable. As the landscape evolves, a careful examination of these property types will be essential in navigating this transition. Buyers and sellers will need to leverage this insight to make informed decisions that align with the emerging market trends. 1. Condos and urban apartments. Remember when condos were the top choice for retirees and those seeking a low-maintenance lifestyle? The market dynamics are changing. It appears the robust demand for condominiums is beginning to soften. Consequently, many individuals are now seeking residences in quieter, suburban areas that offer more space and a better quality of life. This shift in preference is not only altering the real estate market dynamics, but also prompting developers to rethink their strategies. The traditional urban centers must adapt to retain their appeal amidst this evolving landscape of living choices. As a result, urban real estate values are fluctuating dramatically. In this new environment, developers are focusing on creating mixed-use spaces that cater to the needs of remote workers, integrating amenities that support work-life balance. By doing so, they hope to rejuvenate city living, making it attractive once again for those considering relocation. We're observing a migration towards suburban and rural areas where buyers can often find more space for their money. This evolving demand, combined with an oversupply of urban units in certain locations, is setting the stage for potential price drops. 2. Older suburban homes. As new neighborhoods sprout up with modern amenities and sleek designs, potential buyers often find themselves drawn to contemporary options rather than the vintage appeal of classic homes. This shift raises concerns for homeowners looking to maintain their property values in the changing housing market. Amidst this evolving landscape, homeowners are seeking strategies. To adapt to this competitive environment, many are investing in renovations that blend the charm of classic architecture with modern updates, ensuring their homes remain relevant and appealing to future buyers. Such thoughtful transformations can enhance both comfort and resale potential, creating a win-win situation. It's been observed that while brand-new, large homes in suburban and ex-urban areas are selling at a premium, homes that are 10 to 30 years old in the same vicinity are having a harder time keeping up. This could create a fantastic buying opportunity for those looking to enter a desirable neighborhood at a more accessible price point. For homeowners in this category, particularly those who are banking on their home's equity for retirement, this is a trend worth watching closely. 3. Certain high-end luxury properties. Luxury homes often boast high-end finishes, spacious layouts, and desirable locations. As the market expands, buyers are seeking properties that not only meet their lifestyle needs, but also provide a sense of exclusivity. However, this surge in demand can lead to unexpected consequences, including overbuilding in certain areas. In response, developers are now faced with the challenge of balancing supply and demand while ensuring properties maintain their allure. Ultimately, the luxury home market continues to evolve, reflecting shifts in consumer preferences and economic conditions, which must be carefully navigated to uphold its prestige and value in the competitive real estate landscape. This surplus, coupled with today's higher interest rates, means the pool of qualified buyers for these premium homes has shrunk. Even affluent buyers are proceeding with more caution, sometimes choosing more modest properties for their next investment. While this is highly dependent on the specific market, it's a national trend that could result in price corrections within the luxury sector. 4. Homes in areas with high unemployment. The connection between local economic conditions and property values is undeniable. For instance, as businesses close and job opportunities dwindle, families begin to feel the strain. In turn, potential home buyers wary of instability are less inclined to invest in properties. This trend not only disrupts the housing market, but can also lead to a ripple effect that extends to other sectors, impacting everything from local schools to retail businesses in the community. In such turbulent times, sellers often face difficult choices. Ultimately, understanding these dynamics is crucial for both buyers and sellers navigating the shifting landscape of real estate. By keeping a close eye on local economic indicators, they can make informed decisions that help stabilize their investments and support their communities during challenging periods. This presents a complex scenario. For buyers, it might signal affordability, but it's linked to the economic instability of the area. For current homeowners, it can introduce significant challenges when they decide it's time to sell. 5. Vacation and second homes. As the costs of living continue to rise, many families are rethinking their aspirations for an additional property. Analysts point out that with the potential for decreased market demand, these second homes could face inevitable drops in value, leading investors to reassess their strategies and financial commitments. For many, this shift in the housing market signals a time of reflection and serious discussion. As the housing landscape evolves, individuals may find themselves grappling with a tough decision: to hold on to their vacation homes or to let go of what was once a cherished dream. This challenging reality prompts conversations about priorities and financial stability in uncertain times. As potential buyers weigh their options, many find themselves questioning whether the benefits of acquiring a second home truly outweigh the financial burdens that accompany it. The heightened expenses, from insurance to ongoing maintenance, loom large in their minds, fostering a sense of caution. This shift toward a more cautious approach is evident, and it signals a cooling trend in the once booming housing market. Some may also worry that the investment will not yield quick returns. At the heart of this cautious mindset is the fear of economic instability. Amid shifting dynamics, buyers are increasingly focused on long-term viability. This cautious mentality has transformed the once booming real estate sector into a more tempered environment, where decisions are made with a keen eye on future financial stability, rather than impulsive purchases that once characterized the market. Many are now prioritizing financial security. In this evolving landscape, buyers increasingly prioritize properties that not only offer a roof over their heads, but also symbolize a future of stability and opportunity. This growing demand highlights their commitment to seeking investments that resonate with their long-term aspirations and financial security. Investors are looking for homes that promise appreciation. Growth. This evolution signifies a deeper understanding among buyers that their investments must not only cater to individual needs, but also resonate with the overarching dynamics of the economy. By making informed decisions, they can foster a market that thrives, enriching both their lives and the community at large. Investors must consider long-term impacts. In conclusion, navigating the complexities of modern real estate requires investors to be not only thoughtful, but also innovative, ensuring that their choices yield benefits that extend beyond personal gain, ultimately fostering a vibrant and prosperous market for everyone involved.